The US stock market, although was bullish in the last week, but what is the probability in the upcoming week? Will the market continue its bull run or will face some kind of resistance? What about the market sentiments? What does it indicate? What about the volatility in the market that measures the risk in the market is indicating? We'll explore the answers of all these questions by doing the technical analysis, understanding the prevailing sentiments in the US stock market, and understanding the prevailing volatility situation in the US stock market. I am D K Sinha. Don't forget to subscribe the channel and hit the notification bell for updates. Let's begin. What emotion is driving the US stock market? If we look at the fear and greed index for S&P 500 broader market index, it currently reads at 49 when the market ended in the last week. So it is in the neutral zone. 1 week ago, this index was reading 39. What does it mean? It was in the fear zone. Certainly, the market sentiments have improved over the week. And this is being an oscillator. There is still a cushion to go from neutral to greed zone and to extreme greed zone. Now let us move to the price chart to undertake the technical analysis and understand the prevailing price action in the US stock market. Let us first check the volatility in the US stock market for S&P 500 index that represents the risk in the market. In the last week, volatility has receded by 25.93%. We can see substantial fall in the volatility, which is favorable for the US stock market. Now let us move to the S&P 500 index. This is the weekly price chart of S&P 500, which closed at 5,626.02, and thereby it was extremely bullish by 4.02% on a week-to-week basis. If we see the price action, the last week the market gapped up and finally it almost engulfed the prior week bearish candle, which is a typical sign of the dominance of bullish in the US stock market over bears. If we further analyze the price action in S&P 500, this is the prior well-defined impulsive wave. If we do the retracement analysis, market has taken support at golden ratio 61.8% retracement level when last corrected, and then there is a sheer bounce. And during the prior week correction, the market took support at EMA 21, which is a short-term moving average. So the market has made an all-time high of 5,669.67. Let us move to the daily price chart to understand the support and resistance. If we look at the daily price chart, what does it tell? That the price has pierced through EMA 21 and EMA 55. This trend line, which is a rising trend line, is acting as a dynamic support, and this is the cup and handle under formation. The moment price goes past 5,655 and closes above that particular point, then it will be breakout of this cup and handle kind of continuation chart pattern. So we will not talk about the resistance because the market is trading quite in proximity of the all-time high. But if we calculate the target on the basis of upcoming cup and handle chart pattern, which is a continuation chart pattern, so its next possible target could be to 5,986, nearly 6,000 level. We all know all the targets of the chart pattern are minimum expected objective. Of course, it will face some kind of minor resistance in this consolidation band area, may consolidate, may spend some time before it gives a breakout. However, considering the price action, we can see the price resistance over here, and there is a price rejection over here and a confluence of EMA 55. So 5,500 to 5,535 is the immediate demand area or support area where this rising trend line is also intervening in this particular zone. However, the major support is that 38.2% retracement level, which is a derivative of the golden ratio at 5,384. So overall trend in the S&P 500 is bullish. Short-term trend, intermediate trend, long-term trend is bullish. Now let us go and check the Nasdaq 100 that represents the tech stocks in the US stock market. Let us first go to the weekly price chart. What we can see here too, it closed in the last week at 19,514.58 and thereby it was bullish by 5.93%, outperforming the broader market index S&P 500 with a massive margin. See the price action. After this correction halted at a proximity of EMA 55, there was a correction again, but the price respected finally EMA 21. And in the last week, a Nasdaq 100 closed above EMA 21 and volume weighted moving average 21 period. So is there any breakout in this index? Let us check it out. So here what we see, this counter trend line, which is acting as a resistance, the price has finally managed to close above that counter trend line. So based on the price action, where is the support and resistance in Nasdaq 100? Let us go to the daily price chart to understand. Here what we can see, there was a good correction over here. And during this period of correction, EMA 21 crossed under EMA 55. So short-term trend was bearish. Now what has happened? This was the counter trend line, which was acting as a resistance. Price during the last trading session of the last week closed above this counter trend line. And this is the support line. So there is a breakout of symmetrical triangle in the market. So considering the price action, there was a resistance over here. Price got rejected for almost 3 to 4 days at 19,000. So 19,000 to 19,200 is a good support area in Nasdaq. This is the good demand area in Nasdaq 100. On upside move, there is an existence of a gap over here. This gap is likely to act as a immediate supply area, and which is at 20,080 to 20,067. This is the gap area where the market might lose some momentum. But we need to have a reversal chart pattern because the short-term trend was bearish. So if we consider this trend line, price rejection, price rejection. So this trend line, which is intervening in the gap area, will act as a resistance. But once the price gives a breakout of this rising trend line, there will be breakout of a inverse head and shoulder. This is the left shoulder, head formation, a right shoulder, and a breakout, which will push the price to much higher level. So there will be probably breakout of cup and handle pattern here. Price may struggle here in this zone, which is a supply area. And once this zone is taken out due to excessive demand, then the next potential target would be to, let us calculate the potential target based on upcoming chart pattern, to around 22,228, and it has a potential to go to 100% expansion at 23,500 level. So overall trend is emerging to be bullish because now EMA 21 has crossed over EMA 55 and currently the price is trading above EMA 21, EMA 55 and volume weighted moving average. There is a support from the small cap stocks in the US stock market. For that, let us move to the price chart of Russell 2000 index. This is the price chart of Russell 2000 index. What we can see, this index in the last week closed at 2,182.49 and thereby it was bullish by 4.36%. Now let us understand the price action in this index. It was trading in a broader range. This was the support, 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 and this area was acting as a resistance. Finally, it gave a breakout of this important resistance area. So there was a breakout of a range which was prevailing for a very, very long time. If we project the target based on this range, then the first target got achieved over here, which was at 2,297. And then this correction started, which was well expected also, because the price got overextended. At the same time, it attained the first target. So on a trend resumption, the next possible target could be to 2,488, which is nothing but the 100% expansion with respect to this range bound movement in Russell 2000. Let us check the daily price chart. Here too, there is a existence of a gap. The gap has been created during the last trading session of the market on Friday. So 2,138 is the immediate support, because there is an existence of a gap with the confluence of EMA 21 and EMA 50. And the next level of support is this area where there has been a false breakout earlier. This area has a resistance, has a support. So 2,094 to 2,138 is the demand area in this particular index. Now this counter trend line is acting as a resistance. So it may provide some kind of resistance to this index. But when this correction took place, the trend remains intact. Even the short-term trend was intact, because EMA 21 did not cross under EMA 55, which means even during this correction, the bulls remain in control. The moment it gives a breakout of this counter trend line, it will be breakout of a symmetrical triangle, which has a very good higher base. So there will be upside momentum developing in this particular index. The moment price gives a breakout of this consolidation band, there will be breakout of a some kind of rounding pattern. At the same time, breakout of a counter trend line. So overall trend is bullish in the US stock market, and considering the price action, there is a higher probability of the market going up rather than going down. Yes, market in a short while can be volatile, can make some kind of minor corrections, but the overall trend is bullish, and the market is likely to form a structure like higher highs and higher lows kind of a structure. So what do you think, friends? The levels which we discussed in S&P 500, Nasdaq 100 and Russell 2000 index, will market respect in the upcoming week? I'll be waiting for your comments in the comment section of this video. Looking forward to meet you very, very soon.